Which ETF pays more income, QDTE or GDXY? I ran the numbers on my portfolio and one of them is clearly the winner. But there's a catch. Stick around because I'll also show you what happens if you match your investment in GDXY to QDTE, and you might be surprised by the result. Before we jump in, I'm not a financial advisor. This is just my personal portfolio for educational purposes. Investing involves risk, and you should always do your own research before making any decisions. Here's where I stand. This is QDTE, the Round Hill Innovation 100 QDTE Covered Call Strategy ETF. Currently, I own 124.62 shares, and my average cost is $31.30. It is currently trading at $28.63, just like the rest of the market. It's been taking a beating. And I'm going to bring you over to show you that is my market return, down 8.53%. My total return now has been 22.61. That is my current dividend yield of 46.35. Yield on cost is down. Dividend growth rate, it has only been around a couple of years, so it does not have a 5-year different dividend growth rate. And currently paying me an annual dividend income of $16.92.34. And on the other side, there is GDXY, which is the Yield Max Gold Miners Option Income Strategy ETF. I currently have 145.45 shares of GDXY, and I own it at $16.01. Currently, it is a share price. It is trading at $13.96. Actually, it had been a pretty strong position until the war started. Energy costs are affecting gold mining. Energy is important to gold miners as well. As you can see, today it's taken a pretty bad beating. Today is Wednesday, March 18th. And as my total return is $39.78 so far. My market return there, I still am plus on the total return, 1.71. That's because of the dividends that have been paid. And that is the annual dividend. Currently has a dividend yield of 51.41. And I am due for an annual dividend income of $11.92.69. Both of these are weekly dividend payers. I like weekly dividend payers because they compound very quickly, and especially with GDXY being at $16, being in that $13 to $16 range, it does compound quickly. Now, if you do want to deep dive into each of these ETFs, I do have full standalone videos breaking both QDTE and GDXY individually. So check the links in the description. But for today, let's see what happens if I invest in GDXY the same amount that I have in QDTE. So right now, my QDTE investment is 124.62 shares at $28.63. So it's about $3,566. My GDXY position's only a little over $2,000. So if I put $3,566 into GDXY, that would give me roughly 255.5 shares in GDXY, and my annual dividend income would be $2,094 per year, which actually overtakes QDTE in total income. So here's the trade-off. QDTE is the income winner at my current holdings, but GDXY catches up if you invest the same dollar amount. For diversification, QDTE is the NASDAQ 100, so it's covering that index, while GDXY is basically the gold miners. So you'd like to have both for diversification. They are both covered call ETFs with very high dividend yields, which means the possibility of NAV erosion is there. It exists. So that shows why it's important to look at both income per share and total investment. QDTE gives me higher income right now with less money, and GDXY could catch up if you match the investment. If you want to see how I built this income, check out my standalone videos on both QDTE and GDXY. I'll link them in the description and at the end of the video. And my next video is going to compare the incomes of SPYI and versus QQQI, which is another interesting income showdown you don't want to miss. So if you enjoyed this breakdown, give it a like, and don't forget to subscribe so you don't miss the SPYI versus QQQI showdown. Thank you for watching.